Hello, gentlemen. Thanks for joining us today. We're going to be talking about vanadium and the investing thesis behind it. Hopefully, you're going to take us through the supply-demand story there and maybe some of the innovation coming out of the sector. But first, before we do, if you could start by telling us a little bit about yourselves, 30 seconds or so. Chris, we'll start with you, top left, work our way around to Terry, Fortune, and then Mark.
Thank you very much. My name is Chris Reid. I'm the Managing Director and CEO of Neometals. We're an Australian listed developer of projects in advanced materials. And we have a vanadium project that we are looking to develop in Finland.
Very good. I'm Terry Perlis with US Vanadium. I'm a member of the board of directors of US Vanadium, and I've been involved in the vanadium industry for 33 years now, and exciting times in front of us here.
Hi, my name is Fortune Mojapelo. I'm the CEO of Bushveld Minerals Limited. We have vanadium assets in South Africa, which essentially comprise two primary processing plants. Two of the four operating primary processing plants are in the world. We supply about just over 3% of the global market of vanadium, and we're also very active in the energy storage space through Bushveld Energy, driving vanadium redox flow batteries in what we think is a very exciting and growing energy storage market.
Very good. And I'm Mark Smith. I'm the chairman of the board and CEO of US Vanadium. It's a privately held company. Terry and I are both shareholders and members of the board. It's a very high purity producing vanadium entity. And like Fortune, we are very interested in the energy storage business, which requires that high purity vanadium. So pretty exciting times. I agree with Terry.
Thank you, gentlemen. Look, appreciate you all coming on. So I think people now understand why you are qualified to talk about this topic. Terry, I'm going to kick off with you first. Would you mind just helping maybe beginners to this commodity, trying to understand the market by giving us a quick overview, if you don't mind?
Sure. Well, vanadium is element number 23 on your periodic table. Today, the global market is about 115,000 tons of pure vanadium per year. About 90% of that consumption occurs in the steel industry, where vanadium is used in small quantities to increase the yield strength of the steel. Typically about 5% of vanadium consumption occurs in the production of titanium alloys used in jet engines and airframes, and a number of other applications, both industrial, defense, and consumer goods related. And then about 5% of vanadium goes into various chemical catalysts, typically oxidation catalysts for production of things like sulfuric acid or maleic anhydride. And more recently, we're seeing a little bit of vanadium going into energy storage. Looking forward, we do see significant growth in consumption of vanadium occurring as a result of ongoing increase in specific vanadium consumption in the steel industry. That is the kilos of V consumed per ton of steel produced. And we see this happening in the developing world primarily, where the quality of the steel products is being upgraded as they develop their economies. The chemical and titanium markets are fairly mature. Right now, titanium's kind of on its back after COVID, and it'll be another year or so before we really see that come back. Chemical side is pretty stable. Now, of course, we have energy storage starting to make a significant impact on the vanadium demand picture. So we're expecting to see very strong growth in the next 5 years in vanadium consumption, somewhere on the order of 7 to 8% per year. On the supply side, we will see growth from existing producers. As we try and put our projections together, we do see as much as another 35 or 36,000 tons of pure vanadium per year coming online if prices justify that in the next few years from existing producers. But even with that, we're gonna be short of our demand projections. So clearly, there's a need for additional investment in this space.
Fantastic. Thanks, Terry. Well, actually, just gathered here today, folks, is you've got Fortune Mojapelo in the shape of Bushveld Minerals, a miner, and obviously, investing heavily in the energy space with the VRFBs. We've got Chris up there with Neometals, who's extracting from steel slag. And then we've obviously got the US Vanadium guys here, who are talking the game of vanadium chemicals. So we've kind of got quite a nice rounded group of individuals here. Fortune, how much is China's dominance in this, especially in related to the steel space, stainless steel space? How much of a problem is it for companies like you, miners like you, to actually be able to forecast what the future pricing will be? Because that does affect your business.
Yeah, it's a good question. I think when you look at China is obviously a big player in the vanadium industry, both from a consumption and a supply point of view. I think what is interesting, however, is that when you look at the demand side of things, both in terms of the elements that Terry just spoke to, consumption of vanadium and steel, you have good visibility there in terms of, from a policy point of view, with the government trying to drive for greater quality rebar in the construction space, which is driving a growing intensity of use of vanadium in steel making, which means that even if you took a view of steel production peaking at some point, the vanadium demand in steel, we expect it to continue growing, and we think China will continue to play a significant role in that respect, accounting for just over 50% of the global demand. But we do see other regions also coming through. I think as you see infrastructure programs in other markets, including the US, Europe, and we think that, and in emerging markets, we think that will continue to support demand. On the supply side, however, I think an important point to highlight is the fact that supply in China is quite concentrated, right? I mean, there's about Terry, correct me if I'm wrong, I think about 10 thereabouts key producers of vanadium are in China, and they're predominantly co-producers. We do know that with steel production growing as strongly as it has been going, and with iron ore prices as strong as they've been, we do know that the co-producers have been producing almost, if not at capacity. And secondly, we know that the incentive to blend their feedstocks with seaborne iron ore from Australia, Brazil, or South Africa is pretty much been non-existent, with iron ore prices north of $150, which means that co-producers in China are producing almost as much vanadium as they could produce. So what it means going forward, we think is, again, I think that's one of the pointers towards why we think there's a structural deficit in the market going forward. And China has a big say in that because of the supply and the demand dynamics contribution that it makes, as I've explained. One other point I'll just highlight also is that China has made some very specific encouraging policy moves as far as vanadium redox flow batteries, where from a policy perspective, the government has actually articulated support for VRFPs, which we expect to see support the deployment of large-scale vanadium flow batteries in China, which will support demand further.
Okay, that's interesting, actually. And we'll come to some of those points with regards to China and some of the policies there in a bit. Chris, I want to come to you quickly. You've got a multifaceted business. You've gone after the battery thematic heavily with your company. You moved away from mining. You've chosen, one of the projects you've chosen specifically is this steel slag vanadium recovery project up in the Nordics. You could have chosen anything. You've clearly taken a view about the supply demand economics and said, no, we think we can make money here. Do you want to share your thinking on why you decided to plump for a vanadium project, given the erratic nature of pricing in the past few years?
Yeah, certainly. I can remember when I was at the School of Mines, I once wrote a paper in jest called Vanadium Where Angels Fear to Tread. I didn't realize it might end up being true. It is a more volatile chemical or element than certainly my mineral economics background dictated it should be. But look, notwithstanding that, we were presented with the opportunity to look at the steel slag project. I think it's a combination of the iron ores that were mined up in Sweden that had gone into SSAB steel mills, the Linz-Donau furnace that they had, very, very high-grade vanadium product. Previous guys that had a look at it for sort of smelting at different temperatures and trying to tap off the vanadium and some of the other products. We ended up just going back. We did our initial test work using sort of conventional sulfuric and hydrochloric acids, and it looked fantastic. But then we realised that you couldn't get that permitted, so we went for a sodium carbonate-based leach, a little bit more gentler. Have to give it 2 leaches and a regrind, but we've got a project now that looks like it can produce very high purity vanadium pentoxide, and the tailings will be a carbonate, so they're relatively inert and can be used in concrete or building products. So we're pretty happy where that is in terms of where it sits in the cost curve. We project that it'll be down towards the bottom. That's not because of our skill, it's really because of the grade. We've had to actually choose a process that's not as efficient as the traditional methods, but that is to satisfy our wider obligations to be more ESG friendly.
But what you're saying is, do you feel operating in the bottom quartile is great because you can make money there in whatever you're doing, whatever the pricing is. But do you believe that the demand is there? I've seen reports where it says the next 150 years worth of demand is there based on current suppliers into the marketplace. Do you believe that, or do you think there's more demand to come through whatever VRFP or elsewhere?
I think we've had a pretty heavy involvement in the lithium industry for, now would be our 12th year. And we are sort of across the trends within the cathodes. So I hear what Mark and Fortune are saying about VFRBs, and we believe that VFRBs for stationary energy storage battery, if you're unconstrained on size, the VFRBs are the ultimate chemistry. We're now seeing Heinz Schimmelbusch at AMG pairing that with lithium batteries. And, we're now seeing that lithium vanadium cathodes and indeed lithium vanadium anodes for lithium ion batteries are starting to, they're being cycle tested by car makers. We've got solid state lithium metal batteries with vanadium cathodes. There's all sorts of combinations. The guys at Volkswagen are even trialing a nickel vanadium manganese battery to replace cobalt. The lithium vanadium battery has the highest conceivable energy density, and we're really, really excited. And we actually think that the lithium vanadium or the lithium ion battery applications for high purity vanadium will grow to many times the demand from VFRBs.
That's interesting. Mark, I want to bring you in here on this conversation, and we'll maybe pick up on some of these other topics that people have been hitting here. So we first spoke when you were at Largo, right? And we talked about, the going down the chemicals route. One, first, re-rate for the company. It's smart, but obviously the bigger margins down there. And obviously now with US Vanadium, you're very much focused on that. Is that your way of protecting yourself, insulating yourself from these erratic movements with vanadium mining?
Well, there's absolutely no question that it helps that issue. However, we have really made some big changes at US Vanadium recently. We've purchased a roasting and grinding facility. It's about 30 miles north of our Hot Springs processing facility. That facility allows us to bring in steel slag, just about anything that contains vanadium, we can take in as feedstock now. So we are still focused on the chemical side and that ultra high purity V2O5, V2O3. But the beauty of our business is we get to tap into that high end, high margin business on the chemical side, but we've also got the liquidity of the steel side if we need it. And so we view the steel side as kind of our last resort for marketing, and we will continue to serve the chemical side as our number one priority. Batteries are beautiful because they fit in that high purity sector as well. And if the growth in the battery industry is what we think it's going to be, that's going to be a tremendous area for us to participate in as well. And that will actually become our number two, sales outlet, so to speak. So we're pretty excited about where the business is going right now.
It's kind of interesting, actually. Fortune, probably one for you, because you guys have been working on the VRFB, I should say, the Bushveld energy side with VRFB technology for a while now. And that maybe that's your way to also insulate and smooth out some of these curves and maybe capture more of the margin here. Is that resonating with the market yet? Because if I look at some of the numbers here, vanadium use in energy storage is about 1.7% at the moment. It's got some growing to do. How quickly will it grow?
Look, it is still nascent. I think that is true. But in terms of the growth, we think it's strong. We think the momentum is really strong. We see it through the inquiries we get for vanadium supply, for conversion into electrolyte. And again, this is not from analysts talking about what they see as the forecast, right? These are parties that are actually quite involved in this space that are looking for vanadium units for different projects that they're developing. So I think from that angle, it's looking very very promising. I should also add that I think if you look at where the lithium ion industry is today, Chris was talking about being involved in this industry for the past 12 plus years, right? I think that there is where the VRFP stationary market is where the what I'd call the mobility applications of the battery space was some years ago. To my point, it is real. We are seeing it, and which is one of the reasons why we were as bold to go ahead and build an electrolyte manufacturing facility. It's interesting also that I've seen quite a number of parties announce plans to build electrolyte manufacturing facilities, and that for me is an indication of the kind of interest and demand that's coming out for VRFPs. The other point I would just highlight, if I look at just the area where we're operating in South Africa, and I will just give some anecdotal evidence for me. Firstly, around stationary storage. So if let's talk just that universe of stationary applications. We have seen our own utility here in South Africa launch a program to acquire 1,400 megawatt hours of battery energy storage. We've got our own integrated resource plan of the government here that is set aside some quite sizable allocations for battery storage, talking 2,000 megawatts, and add to it the fact that they have moved to relax the regulations around self-generation, lifting the cap to about 100 megawatts, which will open a substantial amount of opportunities for people to do self-generation with storage. So I think when you start to see those sort of policy shifts, and South Africa is not unique in this respect. I think if you look into Europe, you look into the US, you see a number of policy shifts around stationary storage. And within that space, another interesting trend we are seeing is that the applications that are growing are the long duration applications within the stationary space. So the average duration of batteries being deployed, it's trending up, which is also a very positive sign, we think, for vanadium redox flow batteries. So I'm not really perturbed that the numbers are still in the single digits today. I believe that we will see quite a substantial growth going forward.
Yeah, well, actually, there's some tailwinds here because of what's been happening in the energy market across Europe and North America too, where gas prices are up. Well, if I look at the UK here, up 250% since the beginning of the year. There's conversations around gas supply from Russia into Europe. There's a big green economy initiative by the Biden administration here. But the problem that people are coming up against is renewables and its ability to deliver a consistent base load of energy. Is VRFB the solution? Should you guys be, because I do want to talk in this conversation about some of the innovative thinking that you guys are going to have done and will need to do. Do you guys need to team up with the renewables industry to get this thing moving quicker? Probably, actually, I'll put that back to you, actually, Fortune, and then maybe up to Terry.
Let me tell you what we have done in that space and why I think it kind of makes sense. Energy markets are very regulated. So I would say you don't sell batteries the way you sell widgets. You have to engage, in those markets at a very structural level, right? And in this space, IPPs play a big role, which means that you have to work with parties that are developing these projects. Because what will typically happen is that an IPP will go to a big energy user. and say, let me come up with a project that will save you in terms of your energy cost, but will also give you security of supply, right? And will contribute towards your ESG contributions, et cetera, et cetera. They pull up together a project, and proposition is you sign a power purchase agreement with me, right? So the end user signs a power purchase agreement. They don't have to actually put up the capex to put together this project. The developers are the ones who have to wrap this story together. And those parties, it's important that they understand the proposition of VRFPs within the universe of different solutions. Depending on the use case in question, certainly if you're talking, like you said earlier on, around trying to make sure that renewable provides a base load, you need long duration to be able to do that. You're not just talking short duration applications. And you also want the longevity. You want a 20-year PPA, not a 5 or a 7-year PPA. And for that reason, we think that both manufacturers of the batteries and players like ourselves who are active within that value chain, you have to work with those types of players. And when we do that, we think that there are opportunities to capture really scale opportunities, which with a single project, I'm just give some perspective, right? 100 megawatt hour project will require you to supply about 550 metric tons of vanadium, and that's 100 megawatt hours. If you look at some of the projects being deployed in China, 500 megawatt hours, 800 megawatt hours, and that's where you start to have a massive impact on the demand profile.
That's fantastic. And Terry, talk to us about, I know you guys obviously with US Vanadium talking the chemical language, and you've got different sets of products which you're supplying into, but in terms of innovation required to maybe stabilize the ship somewhat for the vanadium players, what innovations are you starting to see, maybe over and above the VRFP conversation?
Yeah, I mean, stability is all about balancing of supply and demand, right? And one of the structural issues we have in the vanadium industry is the fact that 70% of the supply base is really a co-product material coming out of steel mills, primarily in China, but also in Russia. And those sources of supply are very price inelastic. We don't see people making less steel when vanadium prices drop, or making more steel when vanadium prices going up. So the vanadium tail doesn't wag the steel dog. And so the supply base is being co-product based is not really connected with the market. As the market grows, of course, every individual plant or application becomes less important to the overall picture. And I think we start to see some stability, but I think we're still going to, we're going to see some instability as well as we look ahead. We are investing in this flow battery. We've expanded our electrolyte production dramatically. In terms of innovation, we're focused on producing the highest purity electrolyte. We know that very, very low levels of various impurities will have a negative impact on the long-term performance of the system. So that's really where we're focusing our innovation on right now, is trying to produce the purest electrolyte in the world that's going to meet the needs of this industry going forward.
And do you get to charge a premium for that? Is that's the so what moment?
So yeah, if you look at our business model, it is we have a unique capability to produce 3 or 4 9 purity oxides all day long. And so we look for opportunities to sell those high purity oxides into markets that need high purity, where margins are better, or in the downstream chemicals, including electrolyte for batteries. So we're always focused on those high value markets. As Mark suggested, we'll always have one foot on the other side of the fence as well, on the commodity side, because that's where you get liquidity when you need it. So this is a tried and true business plan where we focus on our strengths. We receive very, very good margins from the chemical business. We have liquidity required in the commodity side, and the 1 out of 10 years when the commodity market goes crazy, we get a chance to play in that space as well.
And what about you, Chris? You're steel slag, 68% of the market currently as it stands. That's a really simple game. As you've described, you process it, you sell it, job done. But in the past, we've talked around the language of leasing, or in terms of leasing the chemical, your chemicals, your product, as all of these guys will have talked about. Is that reality? Can you track and trace and sort of see where your product is anywhere in the world? Is there a need for that?
Look, I've got to say we're not as advanced as the other gentleman on the call with respect to leasing. You know, we've finished our pilot plant and doing the feasibility study. You know, I think you know, we're confident we can produce a good quality product, but we're certainly not as advanced as looking into leasing. But you know, I would welcome Mark and Fortune to sort of enlighten me a bit. I mean, I have watched. I've been up to Ronka Power and had a look at the big VFRBs 10 years ago, and was super impressed with where they were going to head, and you know, the fact that the purchase price of the vanadium, as Fortune said, you know, it's 5.5 tons of V2O5 per megawatt hour of storage. So there's a little hurdle in terms of probably the largest single constituent of the battery cost being the vanadium. And my sort of learned colleagues here are much further advanced. They're actually real producers. So I might just be quiet and listen to how they're approaching it.
Well, actually, go on then, Mark. Tell us what would you suggest to a company in its early stages like this? Because I'm fascinated by the way that companies are changing the way that they approach this industry. Because the sheer need to try and retain or maintain or retain or get some control over their future. What would you say to Chris?
Well, I think we look at it as a very broad spectrum of capabilities in terms of how this is all financed, and we certainly welcome the battery owner or battery producer purchasing the electrolyte outright from us. That's a very simple business transaction, very easy to document and audit. We're also very capable and willing to do the leasing model as well. And generally speaking, there's kind of two conditions that ultimately may require that leasing. One is just the volatility in vanadium pricing. And in some people's minds, they think that the leasing model is the right way to take care of that volatility and smooth it out, maybe lower the front end costs for the electrolyte. So, very classic use of a leasing model. But the other reason why leasing may become imperative is that what we're finding is a lot of the large utilities that are looking at these energy storage systems, they don't want to own electrolyte, simply put. They want somebody else to own that electrolyte, and they want somebody else to take it off their hands when that battery life is done. In that case, they really want that to be a leased item so that they don't have it on their books, and we can get into all the different liabilities associated with it and whatnot, but they just don't want to own electrolyte. And they may have rules and policies within their companies that say that they can't have that. So I think you're going to have leasing as an arrow in your bag of ways to serve the customer. But the simplest way I'll still maintain is just to sell it outright and move on.
So if I look at everything, Fortune, you mentioned it earlier, you talked about some of the infrastructure plans around Europe and the US. Is there any way, just in terms of me protecting my investment, I need to understand this thesis properly. Is there any way that vanadium gets substituted out of the production of HSLA steel or high alloy steel in the future, given it's 90% of the market?
I was going to make a comment on the leasing question, but on talking to you, and just a very quick point, and then I'm going to suggest that I think Terry talks to that question, because I think he can talk about ferroniobium and vanadium in his sleep. But to your question about leasing, one additional point I'd highlight is you talked about tracing. A single storage system, stationary storage system, typically contains quite a significant amount of vanadium. You see, it's in the mobility space, you can't really apply leasing models, because when a car is moving from point A to point B, right? How do you trace that amount of metal, right, or element? In a stationary system, it's in one place, and it's typically in a secure place, and it's typically in a substantial enough quantity that you can write an entire contract and put in place all the necessary insurance, protections you need to put in place. And the fact that there's non-degradation of the electrolyte during the long life of the system just lends itself very neatly to a leasing model. But another point about leasing is ultimately also about matching the right kind of capital, right, to projects. What I mean by that is if you look, most of us here as producers, and you look at our capital structure, you'll find that equity is a big chunk of it and not so much debt. Whereas a typical energy project is typically funded predominantly by debt and very little by equity. And as you know, debt is significantly much cheaper. And that's because the credit risk has been taken care of through the PPA, and the counterparty risk has been secured and dealt with. So what that means is essentially you can take a substantial part of the capital of this battery system and fund it through debt. And a leasing model facilitates that pretty well. And so that's why we think it's actually a very important catalyst from the system, right? So as a producer, I'm always interested to sell my vanadium when I produce it, but we can play a role within that value chain with other role players to ensure that a leasing product can be deployed that you can sell your vanadium into, and which will then be the catalyst for the VRFPs. Sorry, take your time on that point.
No, it's worth saying. Probably we're just digging down a bit here, because I think, do you think financial structuring is the way to solve some of the problems in this industry? Because like you say, you dig it up, you process it, you sell it, and you have to keep doing that. This is this annuity stream of cash will change the dynamics for companies getting financed in this space. I mean, and vanadium's not the only one to talk about it. I think nickel and the copper guys are starting to talk that language too. Do you think that's a reality for miners going forward?
As a miner, I think that I will still predominantly be funded through equity, right? But if through a leasing construct, there is good uptake of VRFPs, that what it does do is it helps the demand of my product that I sell into. So as a miner and as a producer, if I've got a very solid offtake that I'm supplying into, and if that offtake is going into a lease, I'm still selling my vanadium, right? But because I now have very solid offtakes, it actually helps the fundability of my balance sheet as a miner and as a company. But just to be clear, the financial engineering around leasing, and if you look at many ways that we talk about it, is off balance sheet, separate SPV structured, because that's where you attract the parties that are interested to take that kind of risk. And also where you build all those instruments, the credit risk instruments that you have to build around a leasing product. So just you need to make that distinction. I talk as a system. Within that system, as a producer, we have a role to play, but there is a leasing player, a role player, who is distinct from the producer. In some instances, some parties may try to treat them as one, but they're very distinct. You have to look at
well, so be clear with me here, because you want to capture as much of the value in the chain as possible, right? So whether you have different vehicles in which you perform different functions, you as a group will try and capture as much value as possible. So I'm saying to you is, how do you, for you, Fortune, would you go down to the chemical space? Because you're at the miner, you're talking about being a miner, you're talking about energy storage with the RFB, but these, if you look at the US Vanadium guys, Mark and Terry, they're talking the chemical game. There's lots of ways you can capture the value. So how far do you think you feel you'd be comfortable as an organization to go?
For me, just to make the point, leasing is not so much about capturing the value as it is about enabling a solution that supports the demand for vanadium, right? That's what leasing allows you to do. So I would be happy with a separate leasing, in fact, number of leasing players that are leasing vanadium out into the market and are providing a steady demand for us to supply into. We'd be happy with that. I think it's not so much about capturing value as it is about assuring that demand through how you enable VRFPs.
Okay, smooth the curves with the distribution model. Got it. Terry, back to the original question, which was around HSLAs and the high alloy steels used for toughening and strengthening typically. Is there any way that vanadium gets substituted out of the process?
So, this is a good question. We talk about high strength, low alloy steels. These are a class of steels that are typically alloyed with either vanadium, niobium, titanium, or some combination of those elements. And we're talking about steels where we're adding typically 0.3 kilos of vanadium per ton of steel to the steel. And in many cases, we can double the yield strength. And first, let's just talk about HSLA and why it's so important. You think about the economics here of putting a small amount of vanadium into the steel and doubling the yield strength. In many cases, steel is a load-bearing material, particularly in developing economies where there's a need to industrialize to create economic opportunity. And to the extent you can use high-strength low-alloy steels instead of the same recipe we've been producing for 140 years, it has incredible value through the entire supply chain. You think about producing steel and building your industrial economy with a minimal consumption of energy and raw materials, a minimal pollution generation, and a minimal amount of capital deployed in steelmaking capacity. So there's economic drivers through the whole chain. If I'm a steel maker, I'll gladly pay for a third of a kilo of vanadium to go into my steel, because if I double the yield strength, I'm going to sell that steel at a 20 or 25% premium. If I'm building the infrastructure project, I'll gladly pay 20 or 25% more for each ton if I have to use 50% less tons of steel. There's economic value there, and there's value through the whole chain in terms of minimization of energy consumption and pollution generation to get the job done. So that's why this class of steels, high-strength low alloys, is so important. When you look at this class of steels, there's some applications where clearly niobium is best. There's some applications where clearly vanadium is best. And there's some applications where if you have the right mill, the right metallurgist, and you're willing to deal with the issues, you can move back and forth between vanadium and niobium. But you're always compromising. There's always a best way metallurgically to make these steels. So if you go back to 2018, when vanadium prices were going through the roof, you saw a lot of Chinese steel mills trying to replace vanadium with niobium in the rebar. And there's some technical issues. The solubility of niobium is low, so you have to reheat the billets to a very high temperature. If you don't have that capability, you can't do it. And then you've got to go through a controlled rolling practice to very precisely produce very fine-grained steel. So it takes time, it takes energy, you have higher rejects. But when vanadium prices are through the roof, some people are going to try and put that square peg in the round hole. And then what you see is typically, as soon as prices come back into normal lines, you see these people rushing back because they're using vanadium because it's predictable and it's easy and it works. And again, there's applications where niobium is best. If we look at line pipe in Arctic conditions, we need very, very fine-grained steel for low temperature properties. But what you also see is a lot of that steel containing vanadium as well as niobium, because you can only get a bit of a strength increase from the niobium. So, the substitutional issue is one that pokes its head up every now and then when we see a market runaway. And the problem is self-correcting in the long term. Quite the opposite. I'll make one more point. Just today, talking with colleagues in China, what we're seeing right now in China, with the issues with electrical power are having a huge impact on a number of industries. One of those is ferrosilicon market. Ferrosilicon is basically a power wrapped up as an alloy, and China is no longer supporting production of these alloys, consumption of power to make materials to export. And so the price of ferrosilicon is going through the roof, and people are now replacing ferrosilicon with vanadium because ferrosilicon is typically a very cheap way to get a little bit of a bump in strength. But with what's going on right now, we're seeing vanadium substituting for ferrosilicon.
Okay, well, here's another one for you, Terry, if you don't mind, because I found that fascinating. Is vanadium is not a very rare earth, but if I look at some of the conversations recently around the geopolitical component coming into commodities as it gets harder and more expensive to find a lot of these things, we've got critical mineral lists around the world, which the US is definitely making big noises about. You've named your company US Vanadium. Yet at the same time, you talk about your colleagues in China. So I'm just wondering, what is the ecosystem for vanadium like? Because it's plentiful, we're not going to see such arguing and fighting. There's not going to be a bifurcated market in terms of pricing. Is it going to be fine going into the future? No wars? No price wars?
Well, I think, if you look at vanadium, we have there's more vanadium in the Earth's crust than there is lithium, cobalt, nickel, chrome, any one of a number of battery minerals. So to question the availability of vanadium really isn't the right question. The question is how quickly we can get it out of the ground, right? And these deposits are spread geographically around the world. China is the biggest producer and consumer of vanadium, like many other things. And they have a lot of vanadium in the ground, and they have intentions to utilize a lot of that vanadium, particularly in high-strength steels and in batteries. If we look around the world, the situation is that there's vanadium deposits everywhere. And so I don't see the next world war occurring over vanadium.
Just the other commodities. Good. Chris, are you still happy that you've got, look, as an investor, I'm looking in and going, vanadium, okay, there's some pretty interesting stories and opportunities ahead here. Are you still pleased that you came into this space? Have you got a better sense of what it's like? Is there anything that you'd have done differently now you know what you know?
Well, I bought a titanium vanadium asset in 2003, so I've been through a few cycles, and there's no substitute for grade. And so, Mark was blessed at Largo with fantastic grade. Fortune's blessed by grade. Grade absolves a lot of sins. And, the only long-term defensible strategy really, if you're in mining, is to try to get down the cost curve, right? We often forget that in cycles. So if I've learned anything, it was as soon as I found a high-grade opportunity, I seized it. A wise man once told me there's no such thing as a wrong rock, as long as someone's going to pay you more than it costs to take it out of the ground. And so, yeah, I think, I've always, I guess for 18 years I've watched vanadium. It's a wonderfully practical material. Like you said, it can harden steel. You alloy it with titanium to make it flexible. You can use it for the chemical storage of energy. It's a fantastic mineral. And, I see there's less co-product stockpiles. I've seen deteriorate over time. Seen lots of blips, but it's a commodity that we are comfortable with going forward because there's increasing applications that are coming from energy storage. I think it's, we got into recycling in 2016 predominantly, to source cobalt after we had started developing the world's second largest hard rock lithium mine. We could see cobalt, the base load applications were for sort of, it's a non-magnetic metal, but we could see the uses and the increasing uses from energy storage. And of course, the energy storage guys can pay more than the traditional users, we get to the stage where VRFPs or lithium vanadium cathodes are mainstream. These guys are getting the highest value in use. They will pay the highest price. They will pay more than the steel makers because they're getting more value for it. So, yeah, I think fundamentally we're very, very comfortable with the vanadium industry.
Okay, and Fortune, just one for you. Final one for you is we saw the spikes in price in 05, 09, and obviously in 19. They're very exciting when you're on the way up, not so exciting when it's back on the way down. I mean, do you think this sector sees a much more smooth transition into, the battery story, battery narrative, or do you think we're going to see more volatility going forward?
I don't know about more volatility. I think we will still see some volatility. I think that's something that we, at least in the near term, we should understand. However, I think that over time, as VRFPs start to contribute a greater share of the demand profile, we hope to see that volatility will reduce. But I think the other point to make is that when you look at that entire price curve with all the peaks and the troughs, what I do see is also when you plot an average trend line through, what we do expect to see is that the floor growing a little bit higher, which we think is certainly going to be helpful. there was a question earlier on around supply, and the key question really around supply is around, what is the right incentive price for vanadium to support the development of new capacity. There is a lot of vanadium in the ground, but once we start to see price levels on a more consistent level above a certain floor, we think that we will start to see more capital become available for developing new capacity. Until then, we think that we will see a lot of brownfield type of expansions of the type that we're doing, what US Vanadium is doing. And within that bracket, I include the kind of work that Chris and the team at Neometals are doing in terms of getting hold of high-grade slag material and putting up processing facilities for it. I think that the good thing about all of this is that it is not as capital intensive as as putting up an entirely greenfield facility, even with some decent grades that you will and good grades that you will find like on the Bushveld complex. So I think going forward, as we see demand come through, not only from the steel sector will continue to support demand in a very robust way. But when these other applications, energy storage applications come through, and we start to see on a sustained basis higher floor prices for vanadium, I think we'll definitely see a good response from the supply side. And that response is not going to come from co-production. As I said, I think to build these steel plants, they're very expensive in terms of they cost billions of dollars, and the main driver of that economics is predominantly going to be steel economics. And if you're looking in China, I think the direction of travel is more towards EAF technologies that can absorb scrap metal as feedstock. So what it does, I think, is open up an opportunity from a supply perspective from primary producers, secondary producers that process spent catalysts, producers like Neometals that are looking to process the slag in Scandinavia, and I think that opportunity is quite exciting. Yeah.
Okay, thanks for talking to the market. Mark, I'm going to leave it with you with the final words. Is why should investors be investing in vanadium companies today?
I think Terry, Fortune, and Chris have done an outstanding job of talking about all the benefits that vanadium brings to the world. And when I fly around the world and try to increase our business and increase our sales, I fly in and I see all the uses of vanadium around, and I just smile because they're growing. Every place you go and you see cranes in cities building new buildings, there's vanadium in that project. So it's everywhere. And what we really got to get ourselves prepared for is that demand that the VRFB business could potentially bring to our industry, because that could take up the demand requirements. It could tick up by 30, 40, 50% if the battery takes off the way we think it can take off. We have to be ready for that. And Fortune and Chris and Terry and I can vouch for how difficult it is to increase production and stay within what your cash or your equity or debt requirements have. So it's difficult. The prices that the battery guys want are not the prices that we want. The prices that the steel guys want are not the prices that we want. So you've got that constant tension of trying to create more vanadium supply, but at relatively constrained pricing, except in certain specific peak pricing times. So it's a great business to be in. Vanadium is used everywhere. But this battery business, if it takes off, is going to be a phenomenal game changer for the vanadium industry. And we as suppliers have to be ready for that.